Welcome to our fifth episode of the Real Talk Unfiltered Conversation. We are joined by two members of a startup firm called Twig Finance. I'm happy to have Chafic and Mario in this episode. Welcome, Chafic, and welcome, Mario. Thanks for coming for this episode. Can you just give us a bit of a background on where did you start with in terms of your professional career, and how did you meet Mario? It'll be a great start to our conversation.
Absolutely. First of all, thank you for having us. I started my career working with the likes of the World Bank and the IMF on financial literacy and education projects. Thereafter, I moved to the UN, where I worked with UNDP on societal impact projects, mainly in Bahrain and Iraq. Afterwards, I moved to management consultancy and worked mostly public sector work in the Kingdom and in the UAE with ministries of finance, ministries of education, and other governmental entities. And peak COVID hit, decided I want to go back to my roots. I want to go back to what I was passionate about, financial literacy and education, where part of really my initial research, or part of my first research that I was working on, was about people's saving behaviors and how, in this part of the world especially, it's quite low. So that's what really triggered me into thinking that savings has to be something top of mind that I want to work on, that I want to innovate in that industry. And before we move to Mario, I just want to introduce our third co-founder, Karam, just very briefly. Karam Aldik is our third co-founder. He started his career working with one of the management consulting firms as well. He has 12 years of experience, mostly in core banking digitization in Saudi and the UK.
It's a pleasure to be here today. Thank you for having us. I started my career around 27 years ago, focused very much on services and change management, driving growth from crisis management up to growth or accelerating growth across various industries. For the last 20 years, I focused specifically in payments. And I started my career through first in cards business, working for American Express out of London. And since 2019, moved over into the fintech space and focusing especially on open banking. And I moved to the Middle East 2 years ago. Now, what was an interesting trigger for me is in American Express, I started first in strategy, but I moved very quickly in managing businesses in countries where American Express would drive all the business through relationships with banks, exclusive relationships with banks. So essentially, it's a form of a country management job through the relationship with the bank. And I had the luck or lack of luck of taking over a bunch of countries in Southern Europe right before the Euro crisis. So you can imagine that the skills of change management became very critical because those countries suffered the Euro crisis. And what was interesting was that over the revamping of the business we had to do, we focused on creating debit solutions and issuing the first debit cards of American Express globally as an answer to actual credit business that had collapsed because of the crisis. And that taught me a couple of very interesting elements. First, that there are solutions that should and could be available to people to manage effectively their spending. So that aspect of responsible spending, and that became a passion of mine. The second is that you can make money doing that. And when I'm saying you can make money, that meant in our case, the American Express card network, the banks, and also the consumers and the merchants. So win across all the various segments. So when I moved into open banking, I actually chose that area because it was actually another tool, another way of giving more options and more opportunities to consumers to actually drive that responsible spending. And the saving solutions that we'll talk to you about today is what brought us together with Chafic and Karam. So sharing that passion from the different angles that we came together and helping actually people get more value with the money they have. Or in other words, my mantra is we help people spend the money they have, not the money they would like to have.
Fantastic. Just again, going back, right? How did you guys meet? Where did you guys meet?
So actually I was working for a Saudi company active in open banking, and we were exploring the opening up of partnerships. And there was this company that was focusing at that point in B2C that Karam and Chafic were actually driving. And I met with them, and in the discussion we started actually saying, what about taking that concept, which was very much around helping people define saving objectives and saving smart ways towards these objectives. What if we were to take it into a B2B to C concept? And it was interesting because dynamically the guys had already thought about it. We ended up started talking about potential solutions, total addressable markets, what can be developed, how far could this be taken, etc. So that, it was interesting, it was the beginning of a spark. And that spark got us into more discussions. And for me personally, it was actually a decision to go back and do one more. I felt I have the energy. If it's something that's center innovation, it's a good, solid group of individuals I can work with, then I'm more than happy to actually say, let's change tack and focus on a pre-seed fintech startup. It's actually the second startup experience for all of us.
It's fascinating to know that how Chafic and Karam started with this, and then Mario, you joined in, and all of you are working towards something you're passionate about. You said savings, you said responsibly spending, right? Now, I want to understand what exactly is the business model of Twig, yeah, and what is exactly the core solution what you provide to the B2B, as you said. And because there are a lot of fintech companies out there which are operating in this space, how are we different?
Absolutely. So first of all, our business model is a B2B2C, which means that actually the first and core customer group are merchants. Now, not all merchants. We're talking about merchants who sell expensive items, high-ticket items, aspirational items. And there are many examples we're going to be sharing with you today. These are the items that can easily be 10,000 dirhams, 20,000 dirhams and above. And many different industry segments, many different types of merchants. These are not the items where traditionally someone may use buy now, pay later as a solution because they want the instant gratification and they just don't mind quick borrowing. This is actually the size of goods and services where the customer behavior is quite specific, and interestingly enough, is quite specific across these industry segments.
And across countries as well.
Absolutely, across regions. So essentially, there's two things that are specific in the consumer behavior. First, and we do that, all of us, when we're buying something properly expensive, we're going to browse around if we're looking digitally, or emulate our parents or grandparents and go out in the mall or in the high street and look to see what is available. And that aspect will take time. That creates a major problem for merchants because as we are all browsing around, they're trying to catch our attention and they can't. Today, how do merchants attract one's attention? During specific periods of time, like the end of year, in this part of the world, Ramadan, they will throw these very high sales discounts, the 40, 56, 70%. That's a very ineffective way of driving customer acquisition. And even then, some people may respond, some people will not. As an example, in 6 months, I'm moving into a new place. And I want to decorate it the way that I would like to do so, with expensive furniture, like sofa or dining table, and home appliances. I'm going to browse around because I know these items, I will live with them for quite a good amount of time. So while I'm browsing around, unless someone attracts my attention in a very smart way, I move on and move on. That's problem one. The second problem is, say that I decided that this couch is exactly what I want. Because we're talking about expensive items, so let's say it's 15,000 dirhams or whatever is equivalent in any of the currencies. First of all, how can I finance it? That question of the financing becomes critical. If I'm an ultra high net worth person, congratulations, and that's out of scope. For all the rest of the mere mortals, the aspect of financing is actually critical. It's a critical consideration. What can I do? I can take a loan from a bank. How many people want to take a loan for a designer sofa, and how many banks actually give these loans? In a lot of countries, I come from the UK, such loans don't exist. I'm originally Greek, such loans don't exist. The other things, I may not be able to take a loan because I cannot actually have such a credit line. The other aspect that people may consider is buy now, pay later. That's for smaller value items, either because that's where the business model sits or because there are very high rejection rates for higher ticket items. So actually, I have to think about it. And this is where we come in. We come in with solutions that are easy to use for merchants. Our focus, and this is something I want to emphasize, we create solutions for merchants that are very much targeting their sales or marketing departments that have the budgets, that have the very little patience in terms of using technology. They want to use things that are easy to put into place. We give them these solutions, and with these solutions, actually, they can drive revenue, they can lock in the customers, and they can actually even drive repeat business. So we're focusing on core needs of merchants that sell very expensive items. Why is this a win-win-win? I'm going back to the wins. Because for the merchant, we give them the ability to decide which products, is it all the couches, few couches of specific types where they can offer save now, buy later, that's the name of the solution, to their consumers, and incentivize it. That incentive doesn't have to be the 40, 50, 60%. It can be at any time of the year they want, at whatever level they want. It's a way, it's a motivation, it's a way of attracting the attention of the consumer. That addresses the first issue. The second issue is that they give the ability to this consumer to start paying in installments over a period of time. When they finish paying the last installment, then they get the goods and they get the incentive. So consumers who have affordability issues or liquidity issues, I paid the fees for the school of my children. I'm not going to go and right now and pay for a couch. I can still, though, address it. That 15, 20,000, whatever is the number, ticket item has gone down to 2, 3, 4, 5 every month. So this is actually the business model, and this is the value that we bring to merchants and to their customers.
So Mario, just quick one. When you mentioned at the end of all the installments, they get to buy what they want to, and the incentives. Can you give us an example of what incentive you're talking about?
Absolutely. And I'll give you an example based actually on discussions we've had with merchants. I mentioned earlier those periods of time in the year where you have the big sales. There, merchants, businesses compete with each other on how they're going to attract customers and throwing these very big incentives of the 40, 50, 70% for few and specific items, because that's how it makes financial sense. It may be driven by inventory consideration, may be driven by, okay, let's flog these items because we're going to get more people into the store, digital or actual. In our case, we're giving the ability to the merchants to give a discount at any time of the year on any products they want across to create traffic, or in other words, attract attention. If I want to take my family next summer and take them on vacation, so a family of 4, and take them to South America, to the US, something that is aspirational, not something that is going to the neighboring country, then If the merchant tells me, you can either buy it now, add to cart, or you can actually save now, buy later, and get 10%. That 10%, for me, traveling is a passion of mine. I know I don't have it available. So actually, even if I have the money, have the liquidity, it may still be a reason that is good enough for me to say, let me see what this is actually. Do I need things right now? No. And actually, this helps me with my spend. Why not? That why not aspect is one sweet spot for customers and the merchants. The other one is, oh, now I can afford it, otherwise I can't. And will I risk it waiting for the sales where my destination may not be available? No, let me go for it. So that aspect of the 10%, and this is what merchants are telling us, this is sufficient to attract attention. That creates actually economies of scales.
So it's an interesting thing because me and my wife also do the same thing at our home. Let's say if I have a bigger purchase and we have to buy it after 6 months, we start putting some money in our envelope every day, every month, right? So by the time we hit that particular month, there's not big liquidity going out of our pockets, right? Next thing is, as you were saying, that generally as your business will focus on large or maybe let's say high ticket size items, right? For your business, what ticket size makes sense? Minimum ticket size makes sense. And you said there are multiple examples. As you gave as an example of sofa, you gave an example of a travel. Like, what are the other areas where this concept can be played on?
Absolutely. I'll address that question. So we really sit wherever BNPL reaches its limit. So anything above BNPL.
Okay.
And the end is wherever it is. And in terms of what sort of industries, it's really anything that sells high-ticket aspirational items, aspirational for the consumer or for the customer. That might mean hobbies, like you want to buy golf clubs. So this is something that we would be able to save for and buy later on. Same applies for, Mario mentioned furniture and travel. There's also jewelry. You want to buy the missus on the 15-year anniversary, a piece of jewelry. You know that this is something that you need to save to be able to get. So in short, anything that you may not need right away that you can get in the future because it's a big ticket item that you need to save for.
To give you even more examples, there is in a lot of countries, a lot of people like, they focus on what we call well-being, and for some, the definition of well-being has to do with surgeries or cosmetic surgeries and improvements to the way they look like. These are very expensive. There's around 8 categories, 7 of which are very expensive. That is within the scope. I want to buy, there's other people who would like to focus very much on sports-driven self-improvement. Buying an expensive, really good bike is easily 50,000 dirhams. That's another example. Big expenses basically that any household or any individual has to do or aspires to, or things that they aspire to have.
So one thing which I'm curious about, so taking an example of travel, let's say if you want to book a travel after a year, because travel may get expensive after a year. So you rather book right now, paying installments, and you're ready to go to travel. But items like sofas, right, which are expensive sofas, or items like decorating items of your entire house, right, they don't get, the price doesn't move significantly, right? People can have a thought process as well. Let me put monthly money in a bank or let's say in a debt instrument, get some return, 4, 5, 6, whatever the percent is, with no low risk, right? And you will still have, by the end of the 1 year or 6 months, still end up having some more extra money out of that and then use that to kind of pay, right? So how do you kind of deal with these kind of consumers as well? Because the people who would probably look to make extra returns and then kind of invest, right?
There are multiple segments out there of consumers with different preferences and different behavior. What is interesting, and that comes both from our background in working with banks, especially retail banks, but also our background in terms of understanding consumer preferences and behavior, is that the actual size of the segment of people that are comfortable using a bank account, a personal finance management application, or any other way to save for spending purposes is very small. So people, because what happens is it's all around the consumer behavior. What happens is that people have best intentions. If they're disciplined, if they're not disciplined, they're out of scope, and plenty are not. But even if they're disciplined, they say, I will put aside every whatever amount of time, X amount of money in this way. Then something else happens, and our lives are very dynamic, and suddenly this money is spent somewhere else. Yeah. It may be an issue, or it may be a preference. Maybe out of whim right now, I want to spend this money. So this it's something that we thought very carefully about, and we actually thought that the merchants is an excellent distribution channel, and is the right, if I may say, body to push and democratize the concept to their customers. Why would they do that? Because they anticipate that they're going to make business and acquire customers in a more cost-effective way. So they're an excellent channel to push the idea, promote the idea, become the advocates.
Because once you sign up as a customer, you sign up to the merchant, you are disciplined. You have to, the money gets to be, every month has to be paid out, right? But while you are doing to the banks, it's dependent, right? As you said, there could be issue, the money could go somewhere else as well.
Exactly.
So as a business, what is your current market? Are you just focusing on UAE, GCC? And as a fintech, this solution can be put up globally as well, can be scaled globally as well. So how does your vision looks like as of now and as the vision going forward?
And before you answer that, why UAE? Why Twig Finance was kind of incorporated in UAE?
Look, we started pre-COVID. We were based out of Dubai. Travel was not possible, and there's lots of governmental support. The investment seen here in terms of the funds of funds that finance all of the VCs are the sovereign funds in this region. So it was really a no-brainer, and the talent as well. So that's why we decided to start from here. And definitely our ambition is global. We want to be a solution that is provided in different countries, across regions, across industries. While we are starting now in the UAE, our thoughts and strategies are already at different markets in Europe and Southeast Asia, because the key is having target markets that the culture of saving is relevant. Because we know in this part of the world, it's up and coming, because now governments are pushing individuals to start thinking about savings, whereas other markets are already a lot more mature, where it's a habit. People do save, so people understand the process, understand I need to save to be able to buy something that I cannot afford. So I would use a solution that helps break down this particular objective that I want to achieve.
And if I may add something on this, you asked clearly why Dubai. There is also an additional reason. Dubai, in my opinion, my honest opinion, is a true ecosystem. This is a term that is used and abused left, right, and center. But actually, I would say that if I am to consider it here for a new company and with an innovative idea that wants to set up something new, that aspect of ecosystem is present and it's very impactful in Dubai. What does this mean? You have in a very small geographical area coexisting the actual fintech startups, the investors, the regulator, the banks, the experts, the consultants, the merchants. That exists in other cities as well, in other parts of the world. But in Dubai, the closeness is not, first of all, geographically, but also from an institutional perspective, it's so easy to network easy. It's so easy to meet people. Coupled with one last factor, that so much business that is created in Dubai has actually a focus across the board. It's not just for the local market. People have seen and met so many fintech owners or innovators that are based here, and they're looking, the whole world is their oyster of the opportunity. And that's great. That really pushes, that's wind in your sails.
Fantastic. Look, personally, I just love the concept because I am someone who has always believed in living below your means, but at the same time have aspirations, but save and then get to what you want to get to. So I love it. But in today's world, with instant gratification and borrowing is almost glorified. There is a term called mortgage rich. People want to flaunt their villas, but it's on mortgage. That's why I'm calling it as a mortgage rich. Is your business model going to be counterintuitive to what people are kind of glorifying borrowing and flaunting wealth than actually making a shift towards save and then buy?
It's an excellent question, and it actually links very much into why we're having also these global aspirations and ambitions. I will answer your question by taking a step back and say, actually, one of the reasons why I decided to focus on in payments and stay in payments or the extended payments sector is that this is a massive size. The size of this sector is massive. It's really, really large. And inside there, you have actually so many different consumer segments with so many different preferences. So there is, one of the things I learned up front is that there is room for everybody in there. And because of that, there is room for all types of solutions. I remember when I started in open banking, having debates or mini debates with people in the company saying open banking will close the card business. Card business is dying. No, it's not. And actually it's flourishing because the size of the pie in payments is so big, all these consumer preferences are so varied, and there is variation across industries. So for example, if I take a North American, but especially European perspective, it's interesting that if I take metrics like the number of credit cards or the total spend, not the average, the total spend on credit cards is going down. And why? Because the debit card is going up. Card is healthy. Open banking has a very good and increasing step in the door. You check in Australia, it's actually very nice. A lot of people opt for open banking. You check in the MENA region and you have some countries where credit business is still, I would say, auxiliary or an accessory. And then you have countries like the one where we're here, where the business is booming and people have access, or the kingdom have access to credit. In the kingdom, even, I will say, newly found ease to having the access to this credit. And that, of course, links with the fact that I want everything and I want it now. And I'm willing to actually take the necessary actions and decisions for that. However, the reality is that we know from other parts of the world that when you leave that tool or that set of solutions wide open, it leads to one specific direction, and that's a crash. And it has happened across the board, so it's independent of specific countries and behaviors. So I would say that this actual reality, that in some cases a saving solution comes natural, in some cases because culturally savings are well understood, in other cases because people are going away from credit, that's excellent for us. It's an excellent opportunity. In other cases, as you mentioned, where people are going the other direction, it may need some time till the concept actually beds in and is adopted. And we definitely need to focus on early adopters and then later on the mass. That for us means it has a direct impact on the prioritization. So it means two things. It means that it makes sense for us to look across the board, across regions and markets, and not focus on one or two. Second, it means that we need to be very careful on the assessment of these markets, the assessment of the opportunity and the size, and the prioritization.
So you were saying that the market size is pretty big, right? However, people who prioritize saving will become, in a way, a target customer. However, it will do through the merchant system, but those will be your target system. So, have you got some numbers like what is the overall market size and what is going to be your addressable market? And specifically, this business is driven by consumer behavior, right? And consumer behavior could be spending, consumer behavior could be savings, right? But does this kind of business would require change in consumer behaving pattern to kind of succeed in the long term?
It's a two-stage actually answer. The first is that you mentioned about total addressable market. In reality, it's all industry sectors that have goods or services that are expensive, high ticket, aspirational. And that's either online or in store. Also, this is across markets, across regions. So that total addressable market is significant in size. It's not all e-commerce or all services, but it's that aspect that comes with the high transaction value. So that's the first element. So the second aspect is very much around what is required to actually grow this business. The first step is the merchants. The merchants need to identify that having access to these tools, they can drive more business and they can drive it in a more cost-effective way, which is where we're focusing right now. Then they become the advocates. What does it mean becoming the advocates? If on the website, actually, the right products are incentivized with the right amount, and if the number of installments that I have to pay are reasonable, then as a consumer, I'm enticed. So that consumer behavior is, it's not that you can drive it, but you can influence it. And who is better to influence it than the merchant who's trying to grow their business?
Thank you. So I want to quickly understand a bit more about the solution you're talking about. If you could give a bit of a background on how the solution is going to work with the merchant. Is it through a merchant website or in store? Could you take us through how the solution components are?
So we have a solution that is an embedded solution. It sits with the merchant. So we provide APIs, the solution gets integrated within their ecosystem, and then it appears on their website for whatever products that they choose they want it to appear. All of these are done in the background. That's why we call it embedded, essentially. Our brand is not visible. Our brand takes, like, it's probably powered by. That's the extent that we go in the solution, and the merchant owns it completely, end to end. Because if you want to look at BNPL, for example, at Buy Now Pay Later, the merchant loses custody of the client, because the client, as soon as the client clicks on Buy Now Pay Later with one of the providers, they go to them directly. So they lose custody of the customer. So no, our solution enables them to remain the customers of the merchant. That's why it is embedded and it's in their ecosystem. For the in-store solution as well, we do provide it for the merchants that are brick and mortar or that have both a digital presence and an in-store presence. We allow their customers to choose whatever they want to buy and provide them that accelerated way to continue the purchase.
So how does it work? Like, it's like I sign up for it and automatically one day of a month the money would get deducted out of the bank. Is that it works, right?
So basically imagine that as I was mentioning earlier, I'm browsing around and I'm looking for that sofa that I want to buy. And then this merchant on the product page, where it has add to cart, it also has a save now, buy later option and save 10%. I'm getting intrigued. I want to see what that is. I check the information. It tells me actually that I need to pay in installments. And at the end, I will get the goods and the incentive. Fine. That is relevant to me. I select that option. What comes then is a set of 3 different number of installments that I can select from. 3, 4, 5, 6, whatever makes sense to the merchant for the specific industry. If it is a couch, it will be one logic. If it is a watch, it will be a different logic. I select the one that meets my needs. I link it to my card of choice, and I authorize my payment plan, with the first payment taking place on the spot. And the money going then from the card straight to the merchant. We've enhanced the value proposition for the merchant so that the merchant is properly incentivized to promote the concept and to in turn incentivize the consumer. Now, as a consumer, over the next month, every month I'll be paying my next installment, at the end of which I get the goods and I get the incentive. We don't touch fulfillment. Fulfillment is done by the merchant, business as usual.
So 2 questions here. The first one is the merchants, I'm sure, speaking with a lot of merchants. I'm sure they do have an IT team don't we think that they can build such a capability in-house? This is the first question. The second question I wanted to understand is, yes, we don't touch the fulfillment, as I understand from your side. What happens if in case merchant is not going to fulfill their contractual obligation? Is there a mechanism? If it's a platform, I can understand you can probably rate merchants based on the feedback of the consumers to say, this is not the merchant you want to go with, save now, buy later. But since it's not a platform, it's embedded. Is there a role we play, or how do we manage in the ecosystem?
Absolutely. Okay, so I'll start with the second to address it and then go back to the first one. We have terms and conditions, standard terms and conditions that are available that are supposed to protect both the customer and the business. If something happens and the merchant does not have the item in stock to fulfill anymore, then they will have to refund the money or provide them an option. Do they want to buy something else from the store? So with the terms and condition, this is something of a protection mechanism. To go back to your first question.
Sorry, Shafiq, I've got one more follow-on question, right? These terms and condition is a terms and condition through Twig Finance, or it's a terms and condition between the merchant and the consumer?
We provide a standard template of what should be in the terms and conditions to the merchant, which they can add, edit, change a few things based on their business. No two businesses are the same. One business might want to offer store credit, another might not. I'd rather give you your money back. So we provide that templated terms and condition that is for the merchants, and then when the merchants are approve it, it goes to the customer upon authorizing the payments. They'll have to go through the TNC and approve them as well. Like, I consent to these. So it goes both ways. But the merchant needs to edit it if there's any changes that they want to apply. Going back to the first question now, look, we live in a digital world where people can build whatever they want. So I'd be lying if I told you no one can build it. At the end of the day, it's not rocket science. Paying an installment is not rocket science. But our business, or our core business, is to help drive or help provide solutions to merchant problems. This is what we want to specialize in. That's why we have our Save Now Buy Later engine. We have our cross-sell engine to help them increase the LTV and lifetime value of the customer and spend more with the customer, and so many other things that are lined up to be released. You'll hear about them soon. Businesses, the very large businesses that have IT teams, might be able to build such a thing. The small to medium ones, probably not, because they rely on outsourcing, and they just have the extent of it as an e-commerce platform and a few other tools that are available online. For the big ones, the question really is it part of their core business or not? Anything that has to do with payments and how the payment system works is not the core business of the big ones. The ones that do, they might do it. But will they do it before seeing other people adopt it first? Probably not. If I want to take the buy now, pay later example, we've seen some of the very, very large or conglomerates now implementing a buy now, pay later in their own system that they own completely after 12 years of the existence of the solution. So there's quite a lot of time. We want to retain our first mover advantage, and hopefully we'll be able to do that.
Fantastic. So follow-on question, because you said first mover advantage, right? I mean, do you consider anyone competition in Save Now, Buy Later in this market?
Look,
you don't have to take the name, but
absolutely, absolutely. So buy now, pay later, Save Now, Buy Later is a term that's available globally. It's not new. It's not something that we came up with. In terms of competition, globally and even in the region, no one is doing it from a B2B2C perspective. There are players doing it from a B2C angle, which means the money has to go to them. And on their marketplace, they have select merchants that they allow you to buy from them. That's not our model. We are providing it directly to the merchant in an embedded fashion, and we have a first mover advantage on that part.
There are examples in parts of the world like the US, India, and other ones where the use of savings, the applied use of savings, comes close to what we are talking about. But the pure B2B2C with the embedded aspect, it's something that is actually unique in approach for now. And that's what constitutes part of our first mover advantage.
So I have a last question as we're talking about the competition, yeah, and you can choose not to answer if you want to, but definitely this business to grow, there can be some risk as well. So what are the various risks you foresee as at this stage, which can lead to not to the growth what you're looking at for this business?
One aspect of risk is the adoption. With like any type of innovation or innovative concept, you need those early adopters. And also, to be honest, you need them early on, right? Because if in an ideal world you have many early adopters coming early to you, then you start having a momentum, you build on that momentum, etc. So there is an inherent business risk because this is an innovative idea. The second thing is that depending on the market, there are different dynamics and there are different consumer preferences. That aspect I referred to earlier about so many different segments, so many different preferences. The right prioritization and the right focus in terms of which segments to start with, which merchants to go after, etc., is critical. Because focusing on the wrong ones, because let's say we have our own bias or something like that, that can actually easily delay results or not prove results. So these are two types of risks over and beyond any risks that any startup or any fintech startup naturally has.
Okay. So from my side, is Twig Finance looking for investors? That's one. Second is in the journey of raising funds. If you could kind of give us a roadmap, what you have envisioned, that'll be very useful.
In terms of fundraising, we're a pre-seed startup. We're an early stage startup that have ambitions to go globally, that want to go to different markets at the same time and expand rapidly to retain our first mover advantage. So, of course, we are looking for investors that will, one, believe in the concept early on, and ones that really want to back innovation, because this is pure innovation. This is something that's not available anywhere else in the world yet. And that comes with two potential issues. One of them, a lot of investors tell you, where else has this been applicable? Has it been done before? And if you say no, then you might not get investments. That's why I really highlighted the need for investors or angels that really understand innovation and believe in concepts that are still brand new and not available anywhere else in the world. So that's one part of it.
So in terms of the roadmap that you said, our business plan is to expand in different regions, as we are doing actually right now, as concurrently as possible to actually support that first mover advantage. Automatically, this means that we're speaking with different types of investors in different geography at the same time, whether these are angel investors or these are VCs. So automatically, this means that we have actually a roadmap of opportunities ahead of us that we are trying to tap on. There's a difference between trying to do too much at the same time and failing, or actually strategically putting these pieces of the puzzle. And that's exactly what we're doing. We are not focusing on this kind of more, let's say, mega VCs that have more global look at it. That's for much later. That's one thing. Another aspect that I want to touch upon in terms of the roadmap, we're being asked a lot of times from investors who, whether angels or VCs, who get excited because they have that innovative nature or they believe that this concept has room to grow and succeed. They're asking us, what about your impact? And this is something that actually we have spent time on, working through an organization that acted a little bit like an incubator on the impact. We spoke from the beginning about focusing on segments that of merchants that sell expensive, high-ticket, aspirational items. Now, what's interesting is that what is aspirational for you, for me, for any of us, varies. Yeah. Imagine now people that are entering in many different parts of the world the financial system. Excellent example is India through the UPI system, but there's so many other ones. People who are actually suddenly have their digital identity, they have the digital account, how they communicate with the system immaterial. Like you go to Kenya and they have the Safaricom-based solutions, etc. Those people, what is aspirational to them the moment they start having proper income is to get that fridge in the house, is to get the top level of TV that they can have for the family and increase the quality of life. Fantastic. There are merchants out there that are super eager to actually reach out to these consumers, and they were happy to do it with a reasonable incentive if the way that they interact is more digitalized, standardized, easy to do. That kind of incentivization is music to the ears of a lot of investors who are like, something, I'm not necessarily an expert in what you're doing right now, but I know what that means from an impact perspective. So yes, are we dreaming about it? You have to have a vision and you have to look a few years away. So that roadmap of ours definitely includes that impact further down the road once we go through the proper first funding rounds.
See, it's interesting. By the way, I want to be completely transparent. I have invested in Twig Finance, and more than the innovation, I think the way I always look at any kind of an investment is the following. I usually take this analogy as jockey and horse. If I have to compare your concept as a horse, but what I'm investing is on the jockey. I believe in your vision and the execution, and that's why I've invested. I'm not promoting to invest, but I want to be absolutely transparent. I have invested, and good luck to the team. And I also know, as a matter of fact, you've got some really strong angel investors from really good background. Thank you for joining us in this podcast. It's been very informative and insightful because it's been a while since we have connected as well. And wishing you good luck.
Absolutely. Thank you so much for having us. It was a pleasure and can't wait to see how you grow this podcast even further. Yep.
And I'll say beyond thank you very much for having us today. For all of you listening, the next time that you go out browsing to your favorite merchant for your aspirational item and you see Save Now, Buy Later, now you know where it starts from, and please go and choose that option if it makes sense for you.
Please subscribe to our channel for upcoming episodes.